The Bay Area job market is sending mixed signals this week as surging AI investment coexists with workforce reductions in other tech sectors and persistent economic uncertainty. That combination is concentrating hiring in specialized AI roles while exerting downward pressure on mid-level technical and product positions. The release of new state employment data on August 15, 2025, provides an updated view of the region's labor market heading into the fall. Nationally, initial jobless claims were 224,000 for the week ending August 9th, indicating layoffs remain relatively low even as hiring momentum cools. That pattern mirrors a broader labor market that is steady but rebalancing. Employers are more selective, and hiring is shifting towards strategic investments rather than broad headcount growth. The most recent complete California data from June showed the state's unemployment rate at 5.4% after a net loss of 6,100 non-farm jobs. Locally, July's unemployment was 4.2% in San Francisco, 4.1% in San Mateo, and 5.0% and 5.1% in Alameda and Contra Costa counties, respectively. July's figures, released on August 15, 2025, will be watched for updates to these local trends. The slower hiring pace is reflected in workforce reductions at established Bay Area tech firms, a pattern that often precedes a redistribution of talent toward growth pockets, most notably AI and cloud infrastructure, while increasing competition for senior engineers and product leaders. Oracle filed California WARN notices for 188 positions, 143 in Redwood City and 45 in Pleasanton, impacting software, product, and IT divisions. Such targeted cuts underscore a strategic shift to streamline legacy product costs, even as firms redeploy capital toward cloud and AI offerings, creating short-term demand for contractors and boutique services. Oracle's recent SEC filings reference ongoing restructuring, but do not confirm media reports of a $1 billion cost reduction target. Separately, Intel spinoff Altera plans to lay off 82 employees at its San Jose headquarters as it restructures following its separation. Concurrently, the artificial intelligence sector continues to attract significant capital and expand, accelerating competition for AI engineers, data scientists, and chip designers, demand that is beginning to outpace hiring activity in other tech subsectors. In recent days, several major funding rounds were reported. Santa Clara-based Rivos, a developer of RISC-V AI accelerator chips, has been reported to seek up to $500 million, a raise that could value the company at over $2 billion. San Francisco's Cognition, developer of the AI coding agent Devin, raised about $500 million at a reported $9.8 billion valuation. Enterprise AI firm Cohere, which maintains a substantial Bay Area presence, also closed roughly $500 million in new funding at a reported $6.8 billion valuation. These large rounds intensify competition for senior machine learning talent and may widen top-end compensation, putting pressure on non-AI teams to reconsider retention strategies. AI-driven expansion is affecting San Francisco's commercial real estate. OpenAI has been reported to be in advanced talks to lease an additional building in Mission Bay, which could expand its campus to more than 1 million square feet, an indicator of sustained demand for dense, collaborative office space among leading AI developers and a potential lift for nearby submarkets as firms seek proximity to talent clusters. Demand from AI companies, many of which favor in-person collaboration, is one factor supporting higher office attendance. Placer.ai data shows San Francisco's office foot traffic rose 21.6% year over year in July, moving the city up from the bottom of national office recovery rankings for the first time since the pandemic began. For the Bay Area's large Indo-American professional community, these market dynamics intersect with immigration policy developments. The State Department published the September Visa Bulletin, the final one for the 2025 fiscal year. Unchanged final action dates for India continue to pose backlog risk, a factor that can influence employer retention strategies and prompt candidates to consider internal mobility, remote roles, or alternative immigration pathways. Final action dates for Indian-born applicants remained unchanged at EB1, February 15, 2022, EB2, January 1, 2013, and EB3, May 22, 2013. The State Department noted that high demand may render some employment-based categories temporarily unavailable before the new fiscal year begins in October, underscoring considerations around visa portability and status maintenance for professionals awaiting green cards. The outlook for compensation shows signs of moderating, with budget pressures prompting employers to focus selective pay increases on high-impact AI roles while tightening merit pools elsewhere. A pay scale survey indicates U.S. employers are planning an average salary budget increase of about 3.5% for 2026, down modestly from 2025. This moderation is pronounced in the tech sector, which reports a notable reduction in planned pay increases compared to prior years, pointing to tighter merit and promotion pools outside of the most in-demand AI roles. These dynamics portray a bifurcated Bay Area job market. Concentrated AI-driven demand coexists with broader retrenchment. The strategic choices made by employers and workers over the next 12 to 18 months will influence whether the region sustains its talent advantage or sees dispersion to other United States hubs and remote-friendly firms. AI growth is creating intense pockets of demand for senior talent, driving high valuations and supporting commercial real estate. Simultaneously, the broader market cooldown is prompting workforce adjustments and more conservative salary planning at other firms. For professionals navigating this landscape, aligning skills with resilient growth areas and planning for long-term career mobility and immigration realities are recurring themes.